Assalamu alaikum and good morning. On behalf of Honda Access Pakistan Limited, welcome everyone and thank you for joining us today. My name is Sheikh Wajid Sobhani, Senior Manager Corporate Governance. Joining me today are Mr. Masaya Wakuda, President and CEO, Mr. Mujahid Ulmuk, Vice President and Company Secretary, Mr. Asim Mahmood, Assistant Vice President Technical, Mr. Muhammad Naim, General Manager Sales and Marketing, Mr. Hamudur Rahman, Chief Financial Officer and General Manager, Mr. Mohammad Fraz, Manager Finance. Before we begin today's session, I would like to request Mr. Najab to recite a few verses from the Holy Quran.
بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد صدق الله العظيم.
Jazakallah and thank you. Now, before I invite Mr. Mohammad Firaz to deliver the complete presentation, I would like to inform you that we have a Q&A session will be held at the end of the presentation. If you have any question during the session, please submit in chat and QA tab. Our team will address your queries accordingly. Firaz.
Assalamu alaikum ji. Starting with the corporate briefing session for financial year March 2026. The contents of today's meeting will be the introduction of the company, vision and mission statement, leadership network, chronicles of events, shareholding structure, macroeconomic environment, overview of the automobile industry, company's financial review, sustainability, and then the question and answer session. Starting with the introduction and the company profile, Honda Atlas Car is a public company incorporated in 1992 and commenced commercial production in 1994. We have our manufacturing plant at Manga Mandi, while our registered office is 1 Metro Road. Honda is a subsidiary of Honda Motor Company Japan, and the principal activities of the company are assembling and progressive manufacturing and sale of Honda vehicles and spare parts. These are the key company revenue drivers. Company is listed on HCAR and on PSX with the symbol of HCAR. The models offered by the company, the products of the company are Honda Civic, Honda HRV that includes the hybrid variant and the internal combustion engine, Honda BRV, Honda City. Moreover, HCBL offers CBU models of Honda Accord and Honda CRV. Coming to the vision, Honda strives to be a company that the society wants to exist by sharing joys with the people throughout the world, creating product that maximizes the joy of customers with the speed of affordability and low carbon dioxide. Honda's engines are known for their efficiency and low carbon emissions. Our dealership network is expanded over 23 cities in this country with 60 dealers ranging from 36 3S dealers, 19 2S dealers, and 5 1S dealers. This is the chronicle of events. Honda started from 1992, where it was incorporated, and the recent event that was conducted in this year was the launch of Honda HRV Hybrid that was done in July 2025. Coming to the shareholding structure, our shareholding structure includes foreign and local companies as well as individuals from the stock exchange and insurance companies and mutual funds. The main structure is Honda is a JV between Honda and Atlas Group, with Honda being the parent company holding 51% share, while Atlas Group is holding around 31% shares. Coming to the macroeconomic environment and regulatory environment, the economic outlook appears to be positive, supported by the ongoing reforms and improved macroeconomic conditions. The GDP growth is on its pace and is growing higher than the last year to 3.7 in this year. The current account deficit was converted into current account surplus in March 2026, while remittances number has been stable and is growing eventually. Coming to the policy rate and inflation, policy rate remained stable and then was reduced to 10.5%. That is very suitable for the for the industry and the companies to perform. Similarly, the inflation rate, although it was increased, but it was kept below the two-digit mark of 10%. It was at 7.3%. Exchange rate remained stable, while there was a slight hike in June and July 2025. However, it remained stable at 280, while exchange rate of PKR to JPY parity, there was a slight movement and it ended at 1.76 at March 2026. Coming to the overview of the automobile industry, we consider this is the overall market size. The overall market size has increased by 47% from 150,000 units last year to 220,000 this year, which includes the major increase in the lower C and B category, that is an increase of 93%. Coming to the market share, HSCPL holds its share around 14%, while the market leader currently in this scenario is Suzuki having 36% share in the market, while Toyota holds 24%, and Havel is climbing up to 11%. Company's financial review. These were the key highlights, which primarily included the increase in volume and units. Moreover, company was able to get historic income tax refunds of 4.2 billion in the current year. Moreover, company also sold trade assets of 7.1 billion to improve its cash position. There is an increase in loans, advances, deposits, and prepayments as shown in the balance sheet due to increase in sales tax recoverable due to higher import volumes as the company pays advanced sales tax at a board stage and the advanced tax payments to FPI near the year end. Increase in inventory is also due to ensure continuity of supply. There was higher ordering of CKD local parts and material in transit to ensure supply continuity, and the finished good has also increased to ensure that the financial year 2027 sales plan is met. Company announced a dividend of 9 rupees per share in its 34th AGM that was approved by the shareholders. Coming to the numbers of this year, the vehicle production increased by 70% from 15,545 units last year to 26,430 units this year. Similarly, vehicle sales increased by 59%. That increased from 16,100 to 25,621 units. The revenue increased to 1,22,283. That is an increase of 57%. The gross profit of the company was 9.5 billion, while the gross profit last year was 6.6 billion. The gross profit margin ratio is 8% in this year, while 9% in the previous year due to slight fluctuation in the exchange rates. Profit before tax last year and this year both are at 4%. The profit before tax was 3.2 billion last year and is 5 billion in the current year. Company has shown its cost control measures through this and has ensured that the decrease in GP is not reflected in the profit before tax or profit after tax. Similarly, profit after tax was 3.2 billion, which is higher than the profit after tax in comparative year of 2.7 billion. Earning per share also increased to 22.6, while dividend payout ratio was 40% in this year. Price earning ratio is 6.7 rupees per 6.7 times, while in last year it was 15.2 times 15.2 because of the decrease in share price of each car. Return on assets during the year was 6%. Coming to the financial statements, the asset side, the total assets have increased by 20% to 59 billion as compared to 49 billion in the last year, while shareholders' equity also increased by 9% to 25 billion this year. The H car share price as at March 2025 was 289, which dropped to 152 as at March 2026. Similarly, the market capitalization was 21 billion this year. Coming to the 6 years at a glance, coming to an annualized comparison of all the key elements of the financial position and financial loss summary. We started with the property, plant, equipment, that is item of financial position. The company's compounded annual growth rate for the period from 2021 to 2026 was 8.7%, while the equity grew by 6.9%. Current assets were growing at a rate of 6.2%, while current liabilities were growing at a rate of 5.6%. Coming to the profit and loss section, the sales grew by a CAGR of 12.7%, while GP rose by 20.2%. Profit after tax increased by 12.5% over the period from 2021 to 2026. An increase of 12.5% compounded annually was experienced. This shows that there was all-time high equity levels, robust sales, and profit expansion is the company's direction. Coming through the sustainability section, Honda is committed to be a sustainable to adopt sustainable business practices that consider ESG. So we are targeting for 2030 that our CO2 will be reduced by 18%, while in 2050 we are at a target of net zero. Similarly, for water intake, our target for 2030 is 5%, while in 2050 we target to have zero industrial water intake. Reduction of waste generation, the target for 2030 is 9%, while for target for 2050 is zero industrial waste. In alignment with the sustainability policy of the company, Honda has launched its first ever hybrid vehicle, the Honda HR-V eHEV, during this year, and has received quite a good feedback over the customers and the environment and the market. This concludes our presentation for today. We'll be taking over for the question and answer session as stated earlier by Vadrasan.
Thank you very much, Farhan. So we have a lot of questions. And first of all, what is the current status of custom duty structure on hybrid specific parts following the expiration of auto policy 202126 in June 26?
Currently, it was on specific parts, it was 4%, and next it is proposed to be 5% for the hybrid side. It was previously 4%. And no final policy is still not announced, but in consideration is the 5%.
Specific parts. The next question is, do you foresee maintaining GP margins at current levels given the changes in taxes, duties expected, especially the hybrid models? We see margins are based on the taxes are not included in the margins. The taxes increase and hybrid vehicles are technically the amount that we recover from the customer and pay to the government. So our margin will not be affected by the increase in taxes. Similarly, the duty increase will be absorbed over time. And the company will obviously ensure that the localization of the parts will increase its GP margin to maintain the current scenarios.
Secondly, one of the reasons that gross margins are relatively lower as compared to the last year because of the exchange rate impact. As normally 3/4 of our CKD is imported from the Thailand. So during this year, the Thai baht has received a bit of battering against the US dollar. As a result, it was a drop of nearly 10%. So it becomes costlier. Since we have absorbed all these cost pressures and have not passed on the price increase to the customers, so that was one of the reasons our gross margin profit were declined as compared to the last year. Now, starting from this year, there is improvement, and the Thai baht is improving against the US dollar. So we are expecting to maintain or improve our margins in the coming year. Thank you.
The next question is, what is your sales outlook for next year, given the competition?
As you see from the last 2 years, market is on a recovery trend, and we see that recovery in this year as well. And the market, as per our forecast, market can have a growth of 25%. And this year, we are also planning to match the market growth and maintain our market share.
Thank you. Next question is, what is the current custom duty structure on CKD kits, both localized and non-localized for ICE and hybrid vehicles?
For the CBU, it is now revised to 30 to 50%. And for the CKD, it is 30 to 46% on different type of vehicle.
Next question is there any pause in production or sales of HEVs?
There is not any such situation with us because when this previous sales tax subsidy finished on 30th June. We announced the price based on the currently applicable tax of 25% on the hybrid. So to clarify in the market and avoid the confusion in the customer mind. So yes, customer is in a wait and see situation right now because there's a lot of news and rumors in the market, whether it is going down or it is maybe some midway. But we have announced the prices based on the current applicable sales tax. So the customers who is opting, they are getting on the new price.
And the next question is related to use sales mix of all vehicles, specifically Civic, City, HRV, and PRV.
Yes. So right now, our Civic sales is 15% of our total sales mix, and HRV is also 15%, and City is 70%.
And the next question is the 30 to 46% tariff structure of different vehicle is on which type of vehicles? Is this only custom duty or does it also include regulatory duty and additional custom?
Yeah, for 46% also includes both custom duty, ACs and RDs.
What is the current localization rate of HRV, EHEV, and the ICE variant? And these are roadmap given the custom duties concession or hybrid has entered this year.
Coming to the localization ratio in HRB PET, it is 61%, while in EHEV, it is 58%.
Why did the company take a 13 billion loan in December? Was there any specific reason?
Yeah, that was a seasonality impact. Normally in November and December, there is a seasonality impact, and our sales of cars is normally held back, which is a pent-up demand in January in order to meet working capital requirements. So there was a short-term borrowing for 1 or 2 months that we had to take.
Next question is, what were the duties earlier for the budget? Comparison of the duties.
Actually, these are the duties for the CKDs earlier before the budget, and after that, new duties for CKD are still not announced. But for the CBU, it is 50% plus for the different categories of models, but now it is 30% for the lower category. For the CKD, these are the duties before budget, and still there is no change announced. But consideration in the tariff is it is under consideration, but still not announced.
The next question is related to GP margins. Why are the GP margins lower than the industry?
So one of the reasons for the lower GP margins is our sales mix. Currently, almost 3/4 of our total sales is coming from the city model, and we have kept the price under 4 million in order to take sales tax advantage of 18%. So that is why our margins are somewhat compromised because of keeping it lower at the 18% sales tax.
That's localization levels.
Localization levels of HRV ICE is 61%, and while EHEV is 58%.
The next question is the BRB going to discontinue? Similarly, I will mix it with the next question. What is the current sales mix between ICE, F, and HRV?
So far, yes, the PRV we have discontinued as per our set plan. And the next question about the HRV sales mix, the ICE is around 55% and hybrid is 45%.
Within sales of city, can you provide an estimate split between 1.2 and 1.5?
Yeah, 1.2 is roughly 85% of our total city sales. Rest is 1.5.
Is there any new hatchback being planned to introduce in Pakistan by HVAC?
Well, we are working on different options in the market, and so far there are some plans for the future. We are working on that, but exactly which model we are planning that we cannot share at the moment.
Same son, they want you to confirm the current GST on HEVs.
Current?
GST on HEVs.
So yeah, I told earlier the current GST on the hybrid cars is 25%.
And for the CKD, as in detail, it is actually CKD for non-localized parts is 30%, and for the localized parts, it is 46%. And if we see the breakdown of custom duty, additional custom duty, and RD, among this 4% is the additional custom duty, and RDs are at the level of 8% for different categories and combination of these.
What would be the quarter by GP margins, city versus HRV, BRV, civic?
So actually, we have shared the overall margin, which is 8%. It's difficult for us to share the product-wise GP margins for each variant.
Would it be correct to take this to mean that a new model line is going to be launched, or will it just be an update of the current model? Any estimated timeline for launch of a new model, for instance?
This is a very sensitive question, frankly. So the point is, I told earlier that we are working on different options, not even how to improve the existing models and also for the new models. So because our aim is to maintain our market share in the mid and long term, so we are working on different lineup strategies and options right now.
Those who have raised their hands, kindly write down your question in the chat. Can you share an update on the auto policy? This answer has already been given.
If just
Actually, we have already shared that the auto policy is still not announced. That is under discussion. And in the budget, some tariff-related announcements were there, and further adjustment will be in the coming months. But auto policy still is not finalized and announced.
So GST and HEV cars is currently 25%, unless announced otherwise. But current rate is 25%.
The next question is, are you seeing any under 5 million budget vehicle introduced in the coming years?
From us,
Yes.
they're asking from us.
Yes.
Under 5 million budget vehicle in coming year. This is very specific, frankly, question. So we cannot answer about this point. Very sorry.
Those who have raised their hands, kindly write down the questions in the chat and we'll answer them. In which technology new launch will be coming in? EV, PHEVs, EVs, or ICE? Top-end security.
As per our Honda global direction, we still believe hybrid would be a best answer for the customers and especially for the countries like Pakistan, considering the infrastructure and the energy prices and other areas. But on the other hand, customers have their preferences even in the EVs, PHEVs. So we want to remain in every technology. But our point of view right at the moment is that the hybrid is the most right solution for the customer in terms of the total cost of ownership of the product and the utility of the product.
The next question is, can you clarify the price of Honda City is under 4 million or under 5 million?
Yes, the price of Honda City X sales tax is 4 million because this is a threshold. If we go beyond this, then the sales tax would be 25%. So on the top of it, 4 million, then the other taxes are added, including the sales tax and FPD. So it comes around 4.9 million, the retail sales price.
The company is only operating at 52% of their utilization rate. Isn't this scary?
Sorry?
The company is operating at 52% of their utilization level.
Half of the capacity.
Yes, half of the capacity. Isn't it alarming or scaring?
Look, we had a capacity of more than 55,000, rather 60,000, and this is estimate that market went down in 2020 and still on a recovery phase. But in the coming years, we are looking market in a positive way. So based on the, but when the market went down, every OEM has to, align themselves according to the situation. But in the coming years, we're expecting some positive growth in the market, and the time come, we will be using our more capacity.
What is being done to improve this situation?
To improve this situation. Look, we in the last 2 years we have also increased our volumes. If you see, we have consecutive 60% growth over the last 2 years. So, and we maintained our market share irrespective of the high competition in the market. We have been able, although our sales mix has been changed, but still overall we are maintaining our market share. So what we can do, you see lower C and B segment as the highest growth last year, and City was the major player in that area. So for the customer point of view, we compromise on our margins as well, especially in this model, and to facilitate the customer in this segment. So this is what we are doing right now to maximize the volumes in the market.
The next question is from Top Line Securities, and they're asking which category for hybrid launch will be targeted: sedans, crossover, SUVs, or SUVs?
Ideally speaking, every product should have a hybrid variant, right?
Next question is from Mania. You are consistently losing market share.
This is not like that. If you study the market, especially the passenger market, we are maintaining our market share in the last 2 years.
Next question is from Umar Sarang. While I agree with you about the HEVs being easier to adopt and with regards to TCO, don't you feel that the sales tax relaxation on EVs, REVs is something the company should capitalize on? It significantly reduces the comparative TCO for EVs in Pakistan.
Actually, as a Japanese company, our mindset for doing any action, we consider the sustainability of that point. So this subsidy by the government may be a short-term measure, and we have seen in other countries that the government started subsidies in the EV area, and then at that time this EV segment grow, and then when the governments reduced or removed this subsidy, the market of the EV segment start going down. The recent examples are the America, Europe. You can see there now the hybrids are growing over there. So the point is, we want a very sustainable policy and a sustainable, a direction on which we can make this sort of areas.
The next question is from Adil. We see a lot of imported vehicles in small segment cars. Why each car doesn't introduce such small cars?
This imported vehicles basically comes under the used car in Pakistan, and this policy is frankly is very inconsistent. Sometimes they open it, sometimes government change something. Right now, at this point in time, there is not a very clear direction about this area. So once this used car import get regularized and it have a very clear framework, then might be OEMs can consider on this segment.
So the Top Line Securities are asking, with the recent changes in rules and regulation of import of used vehicle, what is your view whether used car import will increase or decrease?
Yeah, for the used car, actually, the policy is changed by the government, and with the current policy, since last 4 months, it is less than 10% of the previous import. So it is drastically reduced, but as it is included in the commercial import side from the specific schemes, so maybe there will be a little increase, but may not be up to the level previously it was. No, it is reduced less than 10% from the previous year.
Can you provide the sales number of City, Civic, BRV, and HRV for the month of April? And what is your first quarter estimate?
Actually, we have those numbers on the PAMA website. Each month we register. Now we on the PAMA, but for they asked the question, we sold around 8,000 units, 7,900 something units for the first quarter. And as I told you that city mix is around 70%, and 15% was Civic and 15% was HRV.
I would like to repeat that those who have raised their hand, kindly write down their messages and their questions in the chat. Sovereign securities. What exactly in regulations had led to difficulty in import of used cars? Can you explain, please?
Actually, the government was previously allowing it under 3 different schemes, having different terms, like while staying in the other countries, there was a length of stay, and then the change in the ownership while coming to Pakistan, and then the taxation. So there were so many regulations. But as a policy, the government has dropped one of the 3 schemes. Secondly, they have put many conditions like they cannot sell within the first year of bringing the vehicle to Pakistan. And similarly, only the companies with a certain capital they can import. There should be the registered private limited companies. So these type of regulations and change in the schemes has reduced it. And they have also included in the commercial import, and there will be a certain margin of 30% applied on the base price as a additional measure. So these are different changes in the policy by the government.
I want to add one thing in this import used car. We have to understand this import used car, why it was started. Basically, there were three schemes under which this was allowed in Pakistan. One was as Mujaisan told about the transfer of residence, gift scheme, and the personal baggage scheme. But that was for a personal use purpose only. It was not a commercial approach for the importing the used car. But unfortunately, that schemes were used for the commercial purpose. So 80% of the used car was coming under the personal baggage scheme. So now the government has understand this point and they want to commercialize this import used car, but the framework is still under the consideration. It's not very clear. So that would be something that is very, we as a OEM and the local manufacturer consider that that is a right approach to see the import used car.
The next question is from Umar Saram from Chase Securities. Given commercial import of used cars is now open, are there any plans to bring them under the H-car banner? Is it a feasible business line to pursue for you?
It is not yet open because the government is still working on that area. They made a proposal, but it's not approved yet. So once that policy is approved, and then every OEM will be considering this area as well, maybe, if it would be feasible.
Comment on the future outlook of the company for financial year 2027.
Right. Thank you for the question. We are expecting that market will further grow, approximately at least 25%. And we are trying to keep or even increase our market share. So our growth will be also more than that 25% level.
Gentlemen, if there is no further question, we are going to close this session. Thank you, all of you.
Can you provide contact information for queries later on?
Already extended.
Can you provide the individual sales number? Ikrar Shazam sir, the numbers of sales of City, Civic, BRV are explained in totality by Nexam.
In the month of April, we sold around 2,700 units. Yes, 2,700 units, and out of which around 2,000 was the city, and 300 was the civic, and around 400 was the HF. Maybe a little bit. It can be, plus minus 5%. Please excuse me for that.
The next question is, Sasgar's Greenfield benefit has expired. How do you think you will be impacted, if at all, due to that?
We should not be impacted. Their greenfield has expired, so Sasgar, which they are having some advantage for the last 5 years in under this greenfield, will be finished. Now they have to think how they have to operate. Either they are going to increase the prices, absorbing the margins, or what would be their strategy. So for us, it would not be something different to be impacted.
The next question is from Asad Imran. Can you please comment on what is HCAR's expectation from the auto policy? To what extent a level playing field should be provided to all automakers, especially keeping in mind electric vehicles becoming more favorable due to environmental impact and rising fuel prices?
Our expectation from the policy will be that there will be the equal treatment for the EVs, PHEVs, and HEVs. Currently, HEVs and PHEVs are in one category, and EVs having the different duty structure. But our expectation is that it should be treated in the same way for the duties and similarly for the sales tax.
In other words, we are expecting fair treatment for all the players. This is what we are expecting. Regarding these last questions, we are trying to be competitive and trying to provide a better product regardless of government policy. That's why we told you that we are expecting fair treatment to everyone. And EV, of course, our main product is hybrids. We are promoting hybrid technology because we think this is most practical and realistic solutions for the moment. But we have EV technologies, PHEV technologies in global resource. So if we see the opportunity, we consider it.
Question related to the auto policy. By fair, you mean the duties only? By fair, you mean duties only?
But including duties, all the policy, we expect sales tax and so on. We expect fair and equal criteria conditions.
Thanks. Thank you very much, all of you.